Welcome to the Payment Shed podcast, the weekly podcast that dives into the big topics, trends, and people shaping the worlds of payments, fintech, and business leadership, with your two co-hosts, myself, Grant Evans, and Justin Hanna. Welcome back to another episode of the Payment Shed podcast. Today we're going deep into AI in financial services, from black box LLMs to sovereign agentic commerce. We are joined by Georgios Kolovos, Payments and Fintech Leader at NVIDIA. Georgios, welcome to the show.
Thank you. And you said my name correctly.
Well, that's a rarity for myself. So.
Great to be here.
Can you tell us a little bit about your experience, how you got into financial services and what you do at NVIDIA today?
Yeah, I mean, I've been lucky enough to see financial services and payments in general from all sides of the industry. I've been with GE Money when GE was very active in the banking and the FinCo space. I have the pleasure to work with some of the most interesting banks in Central and Eastern Europe, one of them being Garanti Bank in Turkey, which was extremely innovative. So I've seen it from the issuing side, then spent about 7 years in PayPal. So it was driving a lot of the partnership, a lot of the inorganic growth of PayPal, expanding into different services, so in wallets, mobile wallets and crypto payments, and you name it. Then for a short period of time worked on a merchant side with one of the divisions of booking holding, OpenTable, which was quite interesting. So having this complete view of the industry end to end, it was very obvious to me that data is still quite in abundance, but not used as much as it can be. So I tried experimenting with a few companies around how do we start harvesting some of the insights that comes from this data. And last year started, was it not last year? 2 years ago, started at NVIDIA, and it was at a perfect time. So there was a lot of interest in the market, a lot of very good capabilities that developed, but still quite a lot of uncertainty around how people are using accelerated computing in general, but also AI, particularly in payments. So for the last year and a half, 2 years, have been looking with together with a lot of the partners from NVIDIA's ecosystem around what we can be doing, how we can be driving some of this engagement, how we can kind of even take it to the next stage of evolution of payments businesses across the side, from issuers to networks to acquirers, and along the way of a lot of very interesting fintech conversations.
And NVIDIA are undoubtedly one of the most talked about companies in the world at the moment, I would say, as well.
Correct. There's a lot of interest. And we'll talk a little bit further. We are hosting our biggest developer event in about 3 weeks in San Jose, and just the interest is phenomenal. We already sold out the in-person views, and kind of now the only way people want to join that is online. But the interest is there. Interest hasn't stopped over the last 3-4 years, but there's still so much more to be explored.
When we talk about kind of data points in the ecosystem, the new NVIDIA report, tell us a little bit about that and kind of your findings from that.
We do every year. We do a State of Financial Services and AI report. This year, there are probably two things that were kind of not that it was a surprise, but they were most interesting to me. First, almost 100% of all the people that responded saying that the AI budget is growing. Right? It was a good validation that this is a technology that will be here to stay, and people continuing investing. The other one, which was also very interesting, most of the payments company or financial services company have already some sort of experience in working with AI. And now they start looking at, okay, how do we get it to scale? How do you start looking into a little bit more holistically? Most importantly, how do we start thinking on, hey, if we deploy this at scale across our entire organization, where you get that? And about 80% of the company that responded start looking in open source. And open source is quite an interesting area that NVIDIA has been investing quite heavily over. NVIDIA, I don't know if you're aware of CUDA or developer library. So a lot of this library is open source. So NVIDIA is investing heavily in this space.
I think that's a bit of a transition we've seen in general, that people are kind of going down that open source route. You know, it's like someone saying to the competition, here you go. How do you follow suit as well, right?
But it's not the competition only. It's about, and this is what by the way, I love about payments. I mean, we do work in some other financial services industries, but payments by far is the more collaborative part of the financial services industry, right?
Yeah.
Even if everyone competes with everyone, at the same time, the way the industry work, we all work together, right? So there's no people are not afraid to share. There's a lot of very interesting technical papers, a lot of very interesting events where people openly discuss their progress. And I think this is one of the biggest trends of the industry. On the other side, you can say it's also a bit of a curse. There's an lot of information. I mean, you look into LinkedIn and all the reports that are coming, okay, AI changing payments, banking and all of that. So it's very difficult to stay on top of that. But the interest is there and the collaboration is looking. So this is where open source come quite strongly, right? The more companies are going to experiment and work with open source, the more they share, the more the industry is elevated further.
And I think when you look at the financial services industry, there is a real onus on, owning the AI stack, and that's from hardware to, regulation as well. Why do you think that we look at it that way in financial services?
So there's another report that we published early, kind of mid last year, which was quite interesting. We did it with ServiceNow, a report about the maturity of financial services. This was very focused on banking and their adoption of AI. And actually in 2025, the maturity has dropped because the industry, AI, it's progressing with such a speed. And companies in financial services and payment in particular not always move with the same speed, and that's for good reasons. We are handling quite a lot of money, a lot of importance, so we need to stay on top of that. To answer your question, the reason why we see that the more control you have across the entire stack, the better you'll be able to evolve. It's not about doing a short-term fix on a particular case. It's more about how do we change the structure of our operations. And there's tons of surveys, tons of reports, and companies that are taking this more holistic approach are delivering a much more sustainable results. There's some companies are doing whatever, 100, 200 AI pilots, very difficult to gain access onto that. It was very good in the beginning of when this technology was starting to get into the financial services space. You want to get your hands on it, you want to experiment it. But to really get a meaningful impact, you need to be able to, control is a hard work, but you want to have a very clear strategy around that. So every time I talk to boards, in payments, but also in the broader financial services, you typically need 3 strategies, which are very fundamental for you to be successful of using this technology. First is you need to have your compute strategy. And it's respectively what it is you decided to be on-prem because of sovereign questions. So you decided to go full on cloud or some sort of a hybrid. It really doesn't matter. The important thing is that you have a very clear strategy, that you understand what compute requirements are needed, and you stay and you invest consistently onto this one. So this is the foundation. Then the second layer and the second strategy is around data, insights, and models. We've been talking about data for a long time, right? Put all the data in one place, and there's particularly in payments, people have grown through acquisition, through different things. Data is a little bit scattered. But now it's becoming less about, yes, the data need to be in one place, need to be in control. But it's all about how do you transfer this data into insights? And how do you leverage these insights to add value to your customers? Is it the merchants on the acquiring side? Is it to the consumers on the website? And this is also converting not only on the models that are necessary to run a payments operations, but also to the LLMs. How do you use the LLMs? What is the data that you fine tune the LLMs, etc.? So when you think strategy for compute, strategy for your data, and then the final piece is strategy for your applications, right? So we have started upside down. We've started from application. There was a lot of rush. We need very quickly a lot of application. If you don't have the other 2 in place, it's either will become very expensive very quickly, or you not be able to get a lot of the benefits because your data and insights are not in place.
When you talk kind of to other leaders in the industry, what do you kind of hear the opportunities that are available to them via kind of this AI infrastructure kind of the next generation?
I mean, the conversation is changing, right? The conversation is changing in the sense that people realize that this technology is here to stay. While before, kind of even if you look into the beginning of last year, people were still in this phase. I'm not sure if this is not another great tech term that people are trying to use. But now companies start thinking holistically. We've seen a lot of the early progress being on how do you take cost out, right? So how do you drive efficiency from this technology? Now it's all about, okay, this technology can potentially change the way the business model operates. This can start generating some new revenue. So I'm seeing more and more conversation moving that direction. Nevertheless, there's a massive gap. So on one side, you have the technology organization that is quite versed, quite well understanding what is required and what is it. On sometimes the leadership, the business side of the story, not always catching into that understanding. And it's not surprised. A lot of the boards that I talk to, they every day someone comes to and knock on their door and say, hey, we can sort all your AI needs. So we have everything of that. And it's going back to the strategies, right? If you don't have a very clear strategy, if AI is not fully embedded into your strategy, very difficult to be able to cut the noise, right? And be focused on the real thing.
That's quite a funny saying in itself, though, because a lot of the time these companies don't know what their AI needs actually are yet, right? Because they haven't started playing around with it.
Yes, it's it really depends. The way to look, for me, very simple metrics around when you want to understand the maturity of a particular organization about their understanding is when you look into what is their data science and AI teams in place, and the difference is quite stark. It's not a complicated thing to do, particularly where we have so many tools, and LinkedIn is pretty good, a good indicator of this. But when you look into the people that are progressing well, these are people that have a very, very strong data science teams. And it's not about the number of people, it's the quality and the ability to execute.
And that's a nice segue into connected intelligence, something that NVIDIA talk about. So we see connected intelligence as the next frontier, as kind of one of those statements that NVIDIA would make in this area. So if we start broadly on this, what do you guys actually mean by connected intelligence, specifically in payments?
So let's start from one of my favorite, and most of the topics that most of the companies that I talk to in the payment space, with a conversation typically start from the fraud side. And fraud is a very nice area because the impact that you can see in the ROI that you can generate from fraud is pretty easy to articulate. So the faster you process the data, the faster you train the models, the better the performance is. So the bottom line impact, the savings are much better. So if you move from traditional rules-based models, there's a very simple acceleration, which is you move the processing from CPU to GPU. So CPU is sequential processing. You complete once, transaction review, then you do the next. The GPU's potential is that you can do that in parallel. So you can do multiple transactions at the same time. So just moving this simple acceleration provide a lot of benefits. And then you start looking into where the interconnectivity works. The first stage of interconnectivity is when you start looking into transaction in relations to other transactions. So we are leveraging graph neural networks. We published recently last year, a blueprint around how companies can use graph neural networks to prevent fraud. But it's still relatively concise. You're still looking in the fraud use case in isolation. Now we are seeing the emergence of payment foundation models, which leverage a lot. You go deeper into payments. You use the same methodology that is used to train large language models, but rather than use this methodology on language, you apply it to payment transactions. So what happened underneath is each individual transaction is tokenized, and then they are put into time series. So it's very easily to start predicting what is the next transaction in this particular time series. And the interconnectivity comes into that is that you don't necessarily use it only for fraud, but the embeddings that come from these models, now you can use it to start empowering other models across the value chain of payments, maybe for personalization or maybe for routing, all of that. So you start seeing this interconnectivity between transactions, now interconnectivity about individual steps in the value chains of payments. And there's a further step, which is the interconnectivity between different payments organizations. So there's a lot of talk, and particularly here in the UK, where there's a fraud prevention strategy coming to be published. A lot of that is how do you share data between organizations to prevent fraud. This is interconnectivity that you're bringing between the organizations. But the one that we are very excited in is this payment foundation model side, because this provides the next step of evolution of payments. And we see examples. Actually, there are 6 companies in the world that today, I can argue, are way ahead of anyone else that I've seen in this space.
Has network tokenization been, a big factor in kind of moving us forward with that capability as well? Then
So depending on which part of the equation you look into that. So if you look into the acquiring side, yes, there's a lot of benefits around, but it's still looked into one portion of the equation, right? So when you look into acquiring, you have a lot of individual models, right? You have checkout model, you have your fraud models, your authorization, authentication, routing, settlement, In a lot of organizations, these models will work independently. The models that are like these payment foundation models connects those models together, and ultimately they optimize for the benefits of the merchant, right? So, and you've been in this space for quite some time, so there's only 3 factors that matter to merchants, right? The cost of a transaction, the risk appetite of the merchants, and then the end-to-end conversion. So imagine if for each transaction, you can optimize it based on the needs of the customers for this particular the mix of these three metrics for them. So then each models will optimize it for all of that.
We spoke briefly before around Revolut from an issuing perspective and Adyen from an acquiring perspective. Kind of what's your thoughts on the way that they're doing it from a payments foundation model perspective?
I don't want to steal their thunder. Both of these companies are coming to GTC next month to come and talk. So they'll share a lot of very interesting insight, and kind of having a sneak peek of how they are developing it is very, very interesting. Adyen have been very consistent, and I'm kind of quite impressed about the clarity of vision and the focus on execution. Adyen has launched their product Uplift last year. Then they follow up with dynamic identification. So they're using some of these insights from foundation models to start generating new products, which is kind of in the identity space. On the Revolut side, it's a very different perspective. So they're using foundational models to get a better understanding of their relationship with the customers and deepening their connectivity. The interesting thing, the important thing with both of them is that they're doing it at scale. Adyen processing phenomenal amount of revenue to their large merchants. The same Revolut has quite a diverse and broad customer base. So you're seeing these models being used across a very, very mature and large organizations.
Today's episode is sponsored by ISX Financial. Most growing businesses end up stitching together multiple providers to run their payments and banking, leaving them exposed to cash flow, reconciliation, and even security issues. ISX Financial delivers a unified ecosystem with multi-currency accounts, online payments, real-time UK and EU transfers, and global mass payouts. Within that platform, Paid By provides Pay by Bank with real-time settlement notifications, automated reconciliation, and integrated refund management. One partner, one integration, helping your business transact with confidence. You can learn more at isx.financial. That's isx.financial. And a big thank you to the team at ISX for supporting the show. Yeah, I think both of them are, definitely leading the way, even with stuff like agentic commerce, which we wanted to talk to you about and kind of get your feeling on where agentic commerce is at today. And then we apply a payments landscape to that. And are we already seeing tangible benefits coming from agentic commerce in payments that you're seeing?
So I have a very different view than most that is shared on agentic commerce. For me, agentic commerce is nothing more than just a data challenge. And the difference than traditional forms of e-commerce that we've seen is that in some of the models, not in all, in some of the models, the journey starts from one site or one place and ends up in a different, which creates a lot of problems and a lot of open questions around payments in particular. But going back to the data problem. Agentic commerce is a data problem. Interestingly enough, that you need to be able to capture the customer insights one way or the other. So we are seeing it two ways that this is happening today, which kind of is the first step of the agentic commerce. And one is with a chat-based interface. You have all the chat GPT, the perplexity of the world, where you can provide your input and this can trigger an agentic commerce experience. We've done a very interesting partnership with PayPal, where they use our open model Nemotron to create a similar chat-based experience on their own surface, but they also packaged it and sell it to merchants. So this is the first way. You need to tell the agents what they should be buying. Okay, I want a green, let's say a blue shirt with a yellow duck on side. So you put it in the chat and the agent goes and gives the option. The other way, I will link it to the foundation model. This is more relevant for your repeat transactions. If you know, based on experience of the consumer, what are their typical buying habits, this can potentially trigger you. If I know that every 2 weeks I buy coffee from this coffee shop, coffee maker, whatever it is, the right name, then the agent can potentially authorize the agents to go and initiate this part. So this is why, for me, these payment foundation models and getting payments data into insights, and then from that you can start driving a lot of value-added services is important. But this is still giving you only one part of the equation, right? How do you as a consumer give the agents the information the agents need to start the payment transaction? On the other side, and it's very interesting when you start talking with the merchants, even some relatively simple products not always are well prepared and augmented for agentic commerce, right? How do you know that this iPhone and that iPhone from two completely separate merchants are the same model and the same specifications? So there's companies that have started looking into that problem. How do you help merchants to augment their catalogs? I don't know if you follow, Klarna launched agentic commerce product protocol, which is going into that direction. And then you have the kind of the other sides. Once you have the protocols or the catalogs augmented, then how do you enable agents to agents communication? And obviously the third part is all around how do you allow what is the role of the agents? What are the guardrails? How do you do all that? It's a fascinating area. I think it's still less defined than some of the others.
There's a lot of news out there, right, on agentic commerce and what it's doing. But I think similar to what you guys said before is we don't know how powerful it can be just yet. We have these dreams of how powerful we want it to be and how it's going to allow any business to get one up on their competition or just on the industry to help the end consumer. But we just don't know what we don't know yet with that. And it is exciting. But I think there's a lot of structural hurdles that we're still coming up against that allows us to effectively kind of share that data, right?
For sure. I mean, and that, for me, this is where, going back to the conversation we had earlier around the power of the collaboration in the industry needs to come together, not only as a payments, but also with the merchant. And we've done that before, right? The contactless cards has been a long journey, but now you give it for granted. It can happen. It has its own challenges.
We like a hype thing in payments, though, don't we? And I don't think agentic commerce will be that hype thing. I'm just interested to see how quickly we take it from A to B to C as, something people then end up using frequently in their day-to-day lives.
Yeah, I think there will be different models that we will merge. So very simply, in my mind, if you put it into a two-dimension chart, on one side, you have it where the agentic commerce experience starts. Is it from the same merchant or is it from another site outside of the merchant? And then the other side, is it from, as I said, experience that you need to tell the agents one-off transaction, or is it based on your learnings? So there are four models that are emerging. I would expect some of the existing large merchants, let's pick travel. Travel is a fascinating place. I don't know if you try to do your itinerary using some of the chat-based interface or kind of...
Yeah, painful.
It's painful, but it's interesting, right?
Yeah.
And you look into some of the larger OTAs or the larger travel merchants, they have a lot of insights. They have a lot of information, especially if you have been using them for long years. Then what is stopping them to help you build a better iteration based on that? And I would expect this will be a form of agentic commerce that will get faster traction because you are limited into the property of a particular merchant. So a lot of the complexity around switching from one location to another to merge. But this is not what we talk about, right? Most of what we talk into is kind of this very complex scenario, starting from one place, combining a lot and kind of doing an invisible checkout.
I think travel's been called out a lot as well. We've got Trust My Travel. We've got an episode coming out with them soon, and it's one you should listen to, I think, as well, because Will from Trust My Travel has some interesting perspectives on how quickly they'll see agentic adoption in that industry and where it could actually work. So yeah, I think it's definitely kind of the poster child example at the moment, isn't it?
I mean, the way I look, there's two specific use cases in commerce which I think will require, and this is why one of them is why travel is so interesting, because this experience or purchases that you need to do a lot of research before you click the button of buy, right? I don't know how many. If you go and search for a flight, how many flight options will come?
I'll just go on Skyscanner. I'm lazy with it.
But still, even in Skyscanner, you see whatever, a whole 10 pages of different options, right? You still need to go and research, right? You have your criteria, costs, or do you want direct flight? Do you have preferred airlines? Because it still requires some research and all of that.
Yeah.
So these are perfect examples, or kind of perfect use cases where agentic commerce will be very useful. Same, if you're buying a TV, right? There's a lot of other things to mention. If someone can take away some of the hassle for the research, why not? So I think the discoverability is an important bit.
I really like the notion of agentic and loyalty merging. You know, everyone likes something free or discounted, and a lot of your research you can do around is like, what's the best deal I can find? So I think learning your buying behavior, you talk about the coffee, right? But then knowing, okay, well, Nespresso, if you reorder your coffee this month, for doing a promotion offer where you get 4 free sleeves of coffee pods, right? So you might be better off ordering that in advance, Grant, and we're going to order it in June for you because we know they're running this promotion because we found it somewhere else on the internet, right? I think that could be a really, really good way of deploying agentic.
I think that agentic commerce and the architecture is kind of an ongoing kind of system now, right? It's not necessarily here's how it is today. It might change tomorrow. It's changing between now and tomorrow. And you have to be well aware that what is working today will need to change when it comes to tomorrow. How does that kind of work and look in practice kind of when you're advising businesses on that?
When it comes to strategy, right? So where on the acquiring side, the way we typically talk about is, do you see an opportunity to generate an additional value-added services to your merchants? How do you help your merchants to prepare for this? I don't know if we call it new future. I mean, it's still too early to define if we'll change everything.
The mission's never going to stop, though, right?
Exactly.
I think you need to get someone when you get there. You need to be where we're going to be in 5 years' time. We're going to be in 5 years' time, right? You're never really going to complete it.
Correct. And when I worked on the merchant side, it was a very different experience, right? The conversation that you have on the merchant side is very difficult. Changing payments provide changes, setups takes time. There's a lot of focus on the risk, on the prevention, on the customer experience and all of that. Just kind of maybe to close the agentic, I don't think it will be only limited to the online experience. I like your point around loyalty. I think loyalty, even if you think about coffee shops, and the technology is also there to be embedded in these experiences, and it can, depending how far you are ready to share data, it can become extremely interesting even in the offline experiences.
Yeah, and then I think that's where PAR data is being talked about a lot at the moment, right? In terms of collecting that point of sale information and knowing who that customer is. And can we open up that PAR data?
It's so frustrating that we don't see line item data. I mean, this is just, I don't know how many companies have tried to solve that, but the POS space is so fragmented, so hard to do it. Imagine what we will be able to do if you have the data of what I have just popped down by Pret and have for lunch.
Yeah, exactly.
I mean, if I know exactly, then I can plan my diet, my dinner can be sorted. I can know if I need to do an extra session in the gym and all of that. But still, this is a gap in the payments that is still quite frustrating that we are lacking.
It's got to come at some point, though, hasn't it? I just final point as well, and then on like sovereignty and why that matters so much. Do you think that sovereignty would only really matter at an enterprise level, or is this sort of part of a national or regional strategy too that we need to consider?
On an enterprise level, each company needs to have a clear strategy, and it matters. For sure, we see a lot of interest. We have been supporting a lot of what we call NCPs, new clouds that are building sovereign capabilities across Europe and the world. So there is a lot of interest, and I don't think this trend is going to change anytime soon. And this kind of leads to the second point of your question. For sure, countries are realizing that this is a critical infrastructure, and they need to have a saying on that, particularly in the world that we are living today, which is extremely volatile. The more you can control, the more certainty you can provide to your businesses, the better.
Now to kind of the word that most people are dreading from a sales perspective when we talk about AI, how does governance kind of control that innovation within businesses when they look at it?
That's a good, it's a long and complex topic. The good thing is that we have good track records of changing a lot of that. We have examples in the past, particularly in the crypto space, where some company have decided to go against the regulator and decided to do that. It's very difficult to see that as a sustainable strategy in the long run. Regulators are putting their efforts to support, which is very good. And there's two things. The first thing is people are scared because they don't understand it, right? And if you start with your kind of first thought is, I don't want to do anything wrong, it's a very, very challenging perspective to move forward. Of course, you need to understand it to be able to see what's real, what is not, and where there's risk and where there's not. There's a lot that needs to be done, and a lot can be done. But I can go back to the same thing. You need to have a very clear strategy. If you have 200, 400 different pilots that are running at the moment that work out of your data, the chances for it to go wrong is pretty bad. The only way to do it is to take a much more structured approach and much more coordinated approach to do that.
That fear factor always exists in payments, though, doesn't it? I think from chip and pin to contactless to digital wallets, it's like the great unknown is always, people are wary of it to start with, and then adoption grows, trust grows, and then just becomes a normal part of life.
Exactly. It's a process, right? And rightly so, right? It should be with design, but you cannot put your kind of head in the sand and say, I don't want to touch it. By the time you realize that most of your competitors have been working with you, you're already on the back foot. You're trying to catch up, which is quite difficult. I see definitely this changing. I mean, definitely see a lot more appetite, and we did some work also with the FCA to help bring some of that responsible innovation on the forefront, and to be able to work with different parties of the ecosystem to test that. So there's a lot more, and I'll say each country is approaching it slightly differently. But going back to that, so payment foundation model. So if I have a payment foundation models that I know what's my relationship with the customer is, and this powers a lot of the different downstream use cases, it's much more easier to manage than if you have, 20, 30 different models that each fits from different data sources. It's very difficult to control.
When we talk about that governance piece that Justin mentioned before, and where you guys might be looking at specific regions or areas where you can probably make the biggest impact quickly, does something like the EU AI Act, where you've got a collective region looking at this as one sort of group of countries, does that kind of tactically make that region more appealing to yourselves with your products and services that you offer as well?
Europe is, there's a lot of very interesting development that happened last year, in particular around Europe, starting to realize that need to build capacity, need to build the right framework. I'm very impressed with what's happening in France. Mistral has been doing an amazingly to rally the ecosystem, to allowing different players to experiment. Even if it's one region, still there's a lot of flavors in the local dynamics, and it can be the interpretation of the European regulation. It can be the talent that is available. It can be the companies that are operating into the same country. It's very difficult to say a blank paper. As much as we want to say this is a one big European bloc, there's still a lot of flavors in the countries. But the way we operate is through our ecosystem, and the only way to be able to make an impact is to empower the people that work in payments or support payments organization. And this is what we have been doing quite consistently over the last, this has always been NVIDIA's strategy. Leverage the people that understand the specific locally to be able to add value.
And how's the progress with the FSA? How you kind of find them conversation?
Very, very interesting. They had a demo day. I don't know if you had a chance to see. They had actually 2 demo days a few weeks ago. There's some very interesting examples coming up. They were showcasing, not coming up. There's interesting different use cases, different companies in terms of scale, in terms of parts of the value chain that are participating. So I definitely see a lot of positivities, and we can only welcome more and more of this to happen.
So if you could then give one piece of advice to organizations trying to balance innovation with audit readiness, what would it be?
Audit readiness.
Yeah.
I mean, for me, it's always the data, the insights, and the applications, right? So if you don't follow the stack, then it's very difficult to be able to control the flow of data and what you, because most of the financial services companies are afraid of not exposing confidential data to customers, so giving an advice that is not into that. If you have a understanding of how your data is transferred into the insight, what these insights then leads into in terms of actions, then for you to audit it becomes much more easier rather than have, again, 100 different off-the-shelf proposition that you have plugged to your data or different models that you don't fully understand. Very difficult to track.
And AI probably helps as well in terms of actually saying where that data came from, right? It can collate the information.
There's a lot of areas that you can increase the explainability of AI.
And when we talk about the next evolution of payments and intelligence, we know it doesn't stop. What do you think good looks like in 5 years, and what's the challenge of holding that up?
Yeah, I mean, good. We already have good examples of what good looks into. There is, as I said, there are 6 companies that are using these payment foundation models. And hopefully next time we talk, I can share a lot more insights. And we are thinking about how to spread some of the goodness that will come from the GTC after the event. You see a real tangible use cases coming into that. I continue repeating it. I probably starts sounding a little bit boring, but for me, this is the next stage. The next stage is data into insights. Today, we don't have insights, right? We have some kind of patterns that we can track, but we don't necessarily get the most of the data. So if you can use insights, if these insights are then used to add either new services or add new benefits to your customers, this is a pretty good outcome. And if it actually helps to the regulators to be able to feel more comfortable with the things data is used in financial services, even better. And what I really hope at some point of time, we'll get our act together and we can share. I don't even want to share data between institutions to combat fraud. Everyone is talking about how big fraud is a problem and how much increase in fraud has been seen in the last years. But I hope there will be a framework for us, the financial services institution and beyond, to share data. And actually not share data, but share insights. So I don't know if you have heard about federated learning, where you don't necessarily need to share the data, but you have models that work independently in each individual financial services organization, and they share insights to a central models that can provide further intelligence. So I hope this is something that we'll see coming.
And what role do open models play in the future of financial AI systems linked to that?
For sure, I think open models are quite important in terms of cost, for sure. They can make, because think about any reasoning model that you're using today, they are becoming quite even single transaction, and if there's models, it will require a number of different tokens to be generated. So this will be can become quite expensive when you deploy in scale. So I definitely see from that side, open models are very good for companies to be able to explore and to kind of build their unique experiences and retain some of the IP. Right? Interesting. Some of the board discussions which I'm having, it's a simple question: is who owns your models? Right? And it's a very difficult question to answer for any payments organization because it's such fundamental for the way the company operates, but the answer is not straightforward. So the more you can control for your models, the more of the IP you keep for yourself rather than transferring it to a third party.
Do you think we're heading towards a fully autonomous financial decision-making system, or do you think it still needs that manual intervention?
What percentage of the current transactions are automatically approved? 80%, 90%, 95%? You can argue that we're already not far from this, right? Well, the other 5%, there's reasons why they're there. You can optimize it. But again, we are optimizing only on a sliver of the entire
margins, right?
Yeah. So then when you connect them all together, this can become quite interesting. I mean, some of the areas, so we did some work on suspicious activity report creation. Even automating the work for the agents to review these activities and these reports can generate quite significant benefits in optimizing the time to come to a decision. Will there be all still processes that will require human interaction? For sure. What percentage of that? Very hard to say, but I think payment is already quite well automated.
It's well automated, but I think the insight and data bit that you talk about definitely needs clean up. It's ironic to me how many payments companies have tools called insights, and then everything that you're saying is that actually those insights need a hell of a lot of work and effort. No, I mean, it's been a fascinating chat today. Before we wrap up, there is a final part of the show, the Shelf of Shame, where all of our guests nominate something in payments, business, fintech, whatever it might be. What are you bringing to the shelf today?
Add-on applications. I'm always, there's a lot of discussion about buy, build, and build or
build or buy,
yeah. So a lot of the things it's quite interesting also with some of the boards. There's always someone in a board meeting that has a very passionate about particular use case or particular company. So getting this company and being plugged into everything that operates today is fascinating, but it doesn't have a long-term value. So if I can remove this notion immediately to be looking for short-term impact with a simple plug-on to existing operation, I think this will do a lot of good to a lot of companies.
So you're in the buy camp then? Or a bit of both?
Build.
I
think people, and this is where kind of a lot of the build is, when you build yourself, you keep a lot of the IP on your side. You need to be very, very specific. What I'm saying is more about urgent or kind of impulsive add-ons. Let's call it that way. Impulsive add-on, right?
Yeah.
I used to, in one of the other businesses I worked on, Davos was the event I was dreading the most because most of our execs were going to Davos, and then I knew that after Davos I'll have tons of different
let's acquire these
exciting
guys,
businesses that I need to figure out what to do about it. But yes, it's sometimes these impulsive decisions can be quite destructive.
People think that they can just acquire a business and plug a gap within their ecosystem, and it just doesn't work like that, right? And it takes years and years and years and many mistakes, and you actually could have built it in a shorter amount of time.
Correct. I mean, strategy, long-term vision, try to cut off the noise seems to be a difficult skill to master.
Which is why you now work at NVIDIA, right? Which is actually doing that for businesses. So that is leading. Look, brilliant conversation. Thank you so much. It's all about AI, agentic commerce and architectures. Thank you so much for joining us, Georgios. Where can people find you?
LinkedIn, I like LinkedIn. We're always open to conversations. We'll be doing a lot. As mentioned, our developer conference is coming.
What's the date of that?
The 16th to 19th of March. And you can follow most of the session online, which will be quite good. But then definitely I'll make sure that a lot of the payments insight around foundation models, about the future of agentic commerce and agentic payments will be broadly shared there.
We're pretty sad. We wanted to be there, but we
did.
have a clash. Next time
We'll get you next time for sure.
Yeah.
Thank you so much for joining us, Georgios.
Thanks for coming.
Thank you.